Hey everyone, Todd C. Slater here, the Simple Investor, and I thought I'd just give you a quick update on what's happening in the world of real estate. South of the border in the United States, we're watching the Denver and Miami markets take off. Low inventory, real desire to be in these marketplaces, good low interest rates, and some of these areas are seeing some double-digit increases. In fact, Denver is leading the charge. And why not? I mean, they've got some great real estate and, more importantly, great areas to get out to. And if one thing we learned about this pandemic is that everybody is now trying to shift out of some of the areas that are condensed and going into a little bit more open space. So definitely Denver, Miami, these are the areas that are starting to see some real uptick in values and desire. So, multiple offers probably for the next little while. Right here at home, though, in the GTA, we're still seeing some incredible numbers come through. In fact, the 905, so the suburbs of Toronto, are actually the ones that are leading the charge. And not surprising, it's the detached market. In fact, 50% of the transactions right now are in the detached, meaning single family homes, double car, garage, backyard, that kind of thing. So we are seeing a big uptick. In fact, looking at the prices, pretty much year over year, we're almost at 20% in the marketplace right now, year over year. So what does that mean for the near future? Well, I think we're going to continue to see the market staying strong, most importantly because we've got low inventory. Just not enough houses coming on the market. So the buyers that are serious, they are very serious and they're out there buying. Now, interest rates are going to remain low. In fact, the Bank of Canada this week has announced that, we can be set for the next 3 years. They're even considering a reduction if the economy doesn't start to take off in 21. So would that mean a zero interest rate from the Bank of Canada? Well, it's possible, but I'm not going to call it yet. So right now we are staying low interest rates for at least the next 2 to 3 years. Also, the Bank of Canada also wanted to throw out one other, caution is the fact that they don't want people speculating, if possible, in the real estate market. Now, they aren't putting any measures in place. They don't have the government stepping on our throats as they did in 2017 with the foreign buyer tax, or for that matter, the stress test in 2018. Hey, don't forget, if you're going to qualify, you still have to qualify with that stress test. And that's one of those things that, we haven't talked much about it, but it's still there. So if you're going to qualify, you still have to qualify for a much higher rate. Somewhere around 4.5% to 4.8% is where you're going to qualify today when you go in for a mortgage. So just keep that in mind when you're out buying. Other than that, we know that the market will continue probably for the next month or two, but as we start coming closer to the holiday season in December, we know that all markets typically slow down a little bit. Not going to be surprised if this one does. And right now with the governments, putting a lot of pressure on people to stay at home more and more, coming into Thanksgiving weekend here, they're pretty much saying, let's have a virtual Thanksgiving. Well, that may just happen where we're going to see the market, just compress a little bit because they want to tighten things up. Not sure where it's going to lead, though. We know that COVID numbers are up. So is testing, and percentages, they're pretty much remaining the same. So we're going to have to wait and see what happens in the near future. But for now, what I can say is I think the markets are going to be very, very strong. Just to give you an idea, I've got Benjamin Tall coming up on my radio show this weekend, as well as Greg Bunnell. Benjamin Tall is the deputy chief of economics at CIBC World Markets. And we also have Greg Bunnell. He's an anchor with BNN. He's going to be joining me. We're going to talk all about what's going on with the economy and what we can expect in the near future. One thing I can tell you, though, is right now, 21 is probably going to be a very stable year. It's not one that I'm going to be saying speculate on any one particular area. We know that the condominium market's starting to, slow down, flatten down a little. And that's because we've got more inventory coming up and rents are a little bit lower. So people are kind of having a pause. But here's what I know from the builders. They've been telling me every time they do a new release, people are jumping at it, multiple offers, they're selling out really quick. And that's not surprising because a lot of people, I think, still want to speculate for the future. If you're buying brand new construction, the one thing you want to make sure is that you've got an assignment clause just in case. And that's one of those things I want to make sure everybody's aware of. Always have an assignment clause whenever you're buying brand new construction. Who knows what life's going to be like 5 years from now? Heck, you know what? This time last year, we didn't even know that we're going to be hit by a pandemic and pretty much, wipe out a huge amount of the world's economy. So again, just keep that always in mind whenever you're starting to look at something as an investment. Most important thing when we talk about investment real estate to me is, of course, cash flow and keeping it affordable. So being in the outer markets, they're the ones that are staying really, really steady and strong. And I'm always going to encourage people to do that. that. So anyways, that's a quick, brief update for you this week, and I'll make sure I keep you up to date over the next little while. I'm Todd C. Slater, the Simple Investor. I'll talk to you soon.